What's up, everyone? My name is Ale. Welcome back to my world of stocks. And I know I'm a little late this month, but also welcome back to my favorite series in the entire channel, where we cover three specific topics every single month. And those are number one, the current state of the economy and the stock market. On a more macro level, I share my thoughts on everything that's going on right now and where I think we're headed on a little bit more of a macro level. Number two, what stocks I bought or sold last month, which was, of course, July 2021. And finally, number three, what stocks I'm thinking about buying or selling this month here in August of this year. It's a fun series. It's my favorite. I hope you guys enjoyed. Hit the like button if you do. Let's just go ahead and jump straight into it. So starting with part number one, let's talk about the current state of the stock market and the economy. And I think right now, can all agree that pretty much all eyes are on the pepperoni and this new D variant of it. And there's a big fear that it could lead to more lockdowns, which would be disastrous for our economic recovery, obviously would lead to even more inflation that is already a growing concern. So let's just quickly talk about where we're at. I'm going to share my thoughts on all of that. So as always, we'll start with a bit of context and see how high the stock market is trading right now. And as usual, the market continues to trade very expensively. All of the big three indexes are at all-time highs, with the S&P 500 up over 100% in the past 5 years, the Dow Jones up almost 90% as well, and the tech-heavy Nasdaq quickly approaching a mind-blowing gain of 200% in just the past 5 years alone. As a result, valuations are crazy high at the moment. I mean, guys, the Shiller P ratio for the S&P 500 is quickly approaching dot-com bubble levels. That is very scary. I mean, at this point, I think any significant bad news will trigger a very large correction in the market, and any bad news beyond that, like lockdowns, for example, I think would cause a really sharp and sudden crash as well. And speaking of lockdowns, one of the most negative effects from them has been the mass printing of money and government spending that has sent inflation rising. In fact, just by June, we had already seen the highest inflation increase since the Great Recession, and even then it was about the same level. So we're essentially talking about the largest increase in literally decades. Now, to be fair, the White House, along with the Federal Reserve, claimed that these price jumps are not here to stay and that they're mostly a result of supply chains that were disrupted by the pepperoni lockdowns and the stimulus that snowballed on top of that to cause some short-term inflation. So essentially, the stimulus is pumping new money into the economy, so consumers are trying to spend it, but because the supply chains are disrupted, the supply is just not there really to meet the rising demand, and that's sending prices higher. And hey, to be fair, I do actually think that that's a valid point, and there is a possibility that inflation does get at least a little bit more under control over time if jobs return and supply chains are restored. However, the concern is that lockdowns could come back at any moment, and that would completely obliterate this entire recovery, sending inflation through the roof at the worst possible moment when people are not even really allowed to work, which again is a very real possibility given that the D variant of the pepperoni is not only considered to be worse than the original, but it's even been spreading among those that have already taken the V shot, although many claim that the shot does still help a great deal against that transmission. But still, it doesn't even stop at just the D variant. Now Fauci is predicting that an even worse version of the pepperoni is coming, and despite over half of the US population having already received at least one dose of the V shot, Fauci still claims that we will not reach herd immunity until at least 90% of the population is fully like V-shot nated. Personally, I highly doubt we'll ever reach 90% because half the people I speak to tell me that they never really plan to take it. And of course, the fear is that if the world doesn't reach that herd immunity, then we'll just keep seeing new variants pop up and eventually the lockdowns will have to come back. In my opinion, though, I just really don't think that lockdowns will be coming back, at least not here in the US or in any kind of major way like we saw before. Instead, what I think you're going to see happen is certain parts of the country are going to use certain policies to try to deal with the pepperoni, and that's going to differ from other parts of the country too. So before, they used to be using things like lockdowns and heavy restrictions, but that really destroyed the economy. And I really think there's only so much you can destroy an economy before people start to get upset with their elected officials. So instead, what I think politicians are going to do now is I think they're going to try to start implementing V-shot mandates. And you're already seeing that happen in certain places like Los Angeles and New York. I think that's going to increase and happen in more places too as we go forward. But then you also have, and by the way, I'm not the biggest fan of that myself. I don't know how I feel about forcing people to do certain things. But You also have other parts of the country, like entire states, that completely push back against some of those things, like V-shot mandates or even lockdowns and heavy restrictions. But ultimately, what you're left with here is a very divided country. People do not agree with how to deal with the pepperoni, and everyone has a very strong opinion on this, but there's a lot of divisiveness going on right now. And so going forward, I just think that you're gonna have the country dealing with the pepperoni in different ways, and I think that it's not going to be something that is ever going to really go away because of that. We're probably going to have the pepperoni as like a seasonal thing, and you're going to hear about having to get your booster shot every year and stuff like that. That's just my opinion. I don't want to go deep into that, but that's what I think is kind of a likely scenario. Either way, though, if we just look at our scenario here and we just focus on the stock market and the economy, we're in a situation right now where number one, the stock market is way too expensive. And number two, you have a ton of uncertainty when it comes to our economic recovery because of the global health issue and our inability to really get control of it. So I think it's going to lead to a volatile economic recovery. And when you've got those two things, an expensive stock market and a ton of uncertainty, throughout history, it does not bode very well for the stock market. So I think that we're going to have a decent sized correction heading our way, and I think it's going to be within months rather than years. Now, having said that, I don't really care about any of this, and you can love me or hate me, but I'm the type of investor that is always buying stocks regardless, and I'm always looking for opportunities. When there is a correction or a crash, I just increase my buying, but I'm always kind of looking for good opportunities in the stock market. But I think this is important to keep in mind and to keep track of, because you should have some savings on the side in case we do get that decent sized correction, and then you can go in heavier and buy stocks, which is what I always do. Now, that brings us to part number two. What stocks did I buy or sell last month in July? And I actually did not sell any stocks, but I did make quite a few purchases, and there were 5 stocks in total that I purchased in July. So let's quickly run through those, and then I'll talk about what stocks I'm buying here in August, and then we'll finish up the video. And kicking things off, I went ahead and purchased some more of Palantir Technologies, ticker symbol PLTR. This is a fairly new stock that I've been buying for the past couple of months, and they're still currently down about half their value from their highs earlier this year. And even though they are a speculative company and that they're not currently profitable, this is still a stock that I'm more than happy to gamble on long term, as they make the vast majority of their money from government contracts worth tens of millions of dollars each, offering them various special intelligence services. And I just think that's a business that is never going away. If there's two things that we know about the government, it's that number one, they're always going to be wanting more power and surveillance capabilities, and number two, they're always going to have the largest funding in the world because they will always tax their populations, which are two things that bode extremely well for Palantir's future. So I went ahead and added some more shares at a couple different price points, with the largest being in the $21 range. I'm currently about break even on my overall position, so I'm feeling pretty neutral here going into August, but I'll definitely be picking up some more shares if they have any more dips. Moving on to stock number two, though, that was the UFC parent company called Endeavor, ticker symbol EDR, which just recently IPO'd earlier this year, and around the middle of July, the stock dipped all the way down to around $22 a share, and that's when I decided to go back in and pick up a few more shares around that price. Like Palantir, this is another company that is not currently profitable, but they have solid growth when there's no pepperoni lockdowns preventing any public events. And to be honest, I only really own them because I want to have exposure to the UFC, which I think will continue to grow into one of the largest sports leagues in the world, similar to the NBA, NFL, MLB, and so on, even though they do also own several other properties, including the largest talent agency in the world. Either way, though, I think it's definitely a spec stock with some risk, but it's one that I feel is worth gambling on myself. At its current price, I think I'm around 5% up on my position, so I feel pretty neutral about it at the moment. But if they do have any small dips again here in August, I'll probably scoop up a few more shares. But the recent IPOs don't stop there. In July, I also picked up a brand new position in Robinhood, ticker symbol HOOD, and boy, has this been a crazy ride so far. After IPOing at $38 a share, the stock dropped to around $33, and then it absolutely skyrocketed to as much as $85 a share, which was more than double the IPO price, before dropping all the way back down to the $50 range, which is where they typically kind of sit today. I bought my shares right at that IPO price of $38. So for now, I think I'm currently up around 50% on my overall position. That volatility, though, is likely being caused by a combination of Reddit traders along with investors who got overly excited about Cathie Wood buying a ton of the stock herself. But like the other stocks we talked about so far, Robinhood is another company that struggles to be profitable, but with giant revenue growth of triple-digit percentages a year and the future potential of one day dominating the kind of stockbroker market, as well as other avenues that they can take in things like digital payments and so on. I just think Robinhood is a stock that is worth betting on long term. It is up way too much for me at the moment to feel comfortable buying any more shares this month, but I don't plan on selling any of my shares either despite the huge run up. This is a stock that I really want to hold as long as possible. Okay, now with those three recently IPO'd stocks out of the way, I did also add to a couple of my Chinese stocks this month, which should come as no surprise as Chinese tech giants have been getting absolutely hammered recently because of all the regulatory concerns. But I just think this will ultimately have been a great buying opportunity for some of the best Chinese companies out there. And first up here, of course, I had to add some more shares to my Alibaba position, the Chinese Amazon clone, as they are currently still down by over 40% from their highs. Now, I bought at several different price points, but I believe the lowest I was able to catch it at was in the $180 range, which I think is an absolute steal. Unlike the other companies we talked about, Alibaba brings in gigantic sales on top of huge profits year after year, and long term, this is definitely a stock that I want to bet on, even though I do admit that Chinese stocks are risky for their own unique reasons. Despite those concerns, though, I had to also add to my Baidu position, ticker symbol BIDU, which is like the Google version of China. And so far this year, the stock has crashed by a gigantic amount, losing over half of their total value, although I'm still technically up around 60% on my overall position. Because of that, I didn't want to go too heavy on it this past month, but I did still go ahead and add a few more shares here in the $150 range, which I think is a great price for a company that will likely be one of the clear market leaders in not just search, but also in artificial intelligence, cloud computing, and autonomous driving. It's currently back up to the 160s, but if it does dip back down to the 150s again, I'll probably buy a little more. All right, so that does it for last month. What about this month here in August? Well, I don't foresee any selling right now. Of course, things can always change, and that's usually how I am with selling stocks. But right now, I don't think I'll be making any sales, but I will be making some purchases. And of course, all the stocks from last month are still on the table, especially if they have any kind of small dips, although Robinhood is way too high for me at the moment. But some of those other ones I could see maybe purchasing on some dips. However, there are also two more stocks that are brand new positions to my portfolio that I want to be buying here throughout August and at today's prices. So let's go ahead and run through those right now. One of them is a mobile gaming company, and the other is a renewable energy dividend stock. So let's go ahead and talk about those, and then we'll finish up the video. Okay, so starting with the mobile gaming company, that's going to be Zynga, ticker symbol ZNGA, and this is a stock that has really caught my attention as they have now crashed by almost 20% in just the past week alone, following a disappointing earnings report last Friday. And from their 52-week high, they're currently down over 35%. Now, that earnings report disappointed Wall Street because they lowered their full year forecast by 3% because of, and this is actually kind of funny, but they literally said that it was because pepperoni lockdowns and restrictions are being lifted and there's less social distancing in place, that their audience engagement is actually going down and it's hurting their sales growth. So in other words, the global health issue was actually helping their business, but as things get better or kind of go more so back to normal and people start going outside, that ends up hurting them since it means less people are spending time kind of glued to their phones and playing video games. It's kind of funny. But anyway, they also delayed the release of their new Star Wars game for the Nintendo Switch until next year, which is going to hurt that revenue growth even more. Still, even with these setbacks, this is a company that typically grows their sales by around 50% a year. Even if you slow that down dramatically by around 20 percentage points, you'd still be talking about one of the highest growth gaming stocks out there. The drawback is that they struggle a bit with profitability, and I should probably stop buying so many damn spec stocks myself, but with the new Star Wars game coming out for the Switch and all of the other IPs they have like Zynga Poker and Farmville and Words with Friends, not to mention licensing deals with Harry Potter and even Game of Thrones. I just think right now is looking like a really good entry point for this stock, especially if I'm thinking long term on the future of mobile gaming. Next up, I'm buying some of Brookfield Renewable Partners, ticker symbol BEP, which is a very strong dividend play in the renewable energy sector. And what I like about BEP is that they are not only a subsidiary of a giant global asset management company called Brookfield Asset Management, which kind of adds a little more security and reassurance to this smaller stock, but because it's been so volatile over the past year, the stock currently trades below the midpoint of their 52-week range, which leaves their dividend yield above 3%, and that's exactly where I want to start jumping in. They currently operate over 5,000 renewable energy plants around the world with over 20 gigawatts of capacity, and they're also one of the biggest players in hydroelectric power as well, at over half of their total generation. So it's kind of a unique play in that it gives you huge exposure to hydro while still giving you around 22% of wind and 16% of solar, with only around 10% or less making up traditional energy. That's actually really good because other options in the market, like NextEra, for example, they generate around half of all their energy from other sources. So granted, there's more growth to be had in solar, and I wish BEP was already more heavily invested in it, but over the long term, hey, they have a 27 gigawatt expansion plan that will consist of a growing share of solar. So I really think it's only a matter of time until BEP becomes an even more dominant player in the space. Meanwhile, funds from operations have grown by more than 10% a year and are expected to surpass that by even more in the future through 2025, meaning that their dividend is more than safe at today's levels and will likely grow even more over time. In fact, their target growth rate for that dividend is around 5 to 9% a year. Add it all up, and this looks like a great time to pick up this reliable dividend stock in the hot renewable energy market. Okay, so there you have it, guys. Those are all the stocks. Those are all my thoughts. Let me know down below what you think. I'd love to read your comments. I'll try to respond to them as well. And hope you're all doing well. Let me know what stocks you're thinking about buying or selling, and I will catch you guys in the next one. Thanks again for watching. Thank you for the support. It means a lot to me. Take care. Bye-bye.